Hi guys, welcome back to my channel. If you're joining us for the first time, my name is Property Sue. I do vlogs on real estate. If you're not new here by any means, welcome. Today we are going to be talking about property insurance, something which not too many people take seriously. And I think many people assume that for you to have property insurance, you must be the owner of a property. Like for instance, usually rent your place. Maybe some people think that if something happened to your home, maybe a fire by accident, then your landlord would be responsible for damages incurred. But this is far from the truth, because many landlords have what is called landlord insurance, which mostly covers the building itself and things like fixtures, the fences, servant quarters, and anything that is structural in their property, but it does not cover the tenant's belongings. Most of the time I like understanding the history of something, so as to understand why things are the way they are today. The whole concept of property insurance started in 1666 after the Great London Fire. And this fire had started in a bakery, and it started on 2nd September 1666, which was on a Sunday at midnight, and lasted until 6th September, which was on a Thursday. So you can imagine there was so much damage done. And during those days, the concept used by firefighters was breaking fire. Like now you demolish so that you break the continuity of the fire, but an order was needed in order to do that. So since it started on Sunday midnight, maybe for an order to be given from the fire department, it had to be on a working day. So the fire started on midnight, went on till the morning, and an order to start extinguishing it was not given until Sunday evening. So the fire department could not demolish anything because there was no instruction given. And by this time the fire had really spread and the damage had been done. And that is basically where the concept of property insurance began. And after 1666 there were so many attempts to start an insurance scheme, but the first successful insurance scheme was started in 1681 by called Nicholas Brabon and 11 of his associates. So that is the history of property insurance. Of course, most of the time I really don't like insurance and insurance people, because sometimes I think they don't tell you the whole truth when you're taking insurance policies, which is very important. And if you're an insurance agent out there, kindly please inform people on the terms and the hidden clauses in your agreements, because most of the times you find yourself in really compromising situations with, you have paid an insurance company and you gave them your money willingly, and then at the end of the day you're tussling for compensation. And it's basically such a tiresome process that sometimes you end up giving up. So insurance people, be kind, be good. We give you this money willingly. When something happens, just compensate us in the same way. So property is basically insured in two ways. The first way is under open peril. Open peril means like the terms of that insurance cover is going to be defined by the insurance company, and they are going to list all the circumstances under which they have insured you. The second one is named perils. In this case, you'll have insurance covers named like earthquake insurance, flood insurance. So basically those are the two ways in which property is insured. In most Kenyan insurance companies, there are usually three types of property insurance. There is tenant insurance, landlord insurance, and homeowners insurance. Tenant insurance covers the belongings of the tenants. For example, your your appliances, your furniture, things you take away from your home like laptops, cameras, those types of things. But there are several exceptions. Like for instance, if you have very expensive things, you're supposed to buy an additional policy called a rider, so that they can they can fully insure everything in your home. Then landlord's insurance covers the building, like I said earlier, the fences, the servant quarters, the fixtures the landlord has put in his house. That is landlord's insurance. Homeowner's insurance is basically a combination of tenant's insurance and landlord's insurance. So in such cases, both structural and material things in the house are covered. The homeowner's cover also covers damages arising from things such as fire, gas explosions, damage caused by burst pipes or open sewers, wind, volcanic eruptions, things like those. But you have to find out what things they cover. And again, I told you, when dealing with insurances, always find out every little detail. Then let us talk about types of coverage the insurances offer. Coverage is how the insurance compensates you. So the insurances compensate in 3 ways. The first one is replacement cost. This involves repairing or replacing stuff that was in your house initially. The second way is actual cash value, where the company gives you compensation in terms of cash for your items, but this is always minus the depreciation. This means that, for example, if you bought a bed 5 years ago at 70,000 shillings, then the insurance company is not going to pay you 70,000. They are going to say a bed cost like 70,000 5 years ago. What is the cost now? So maybe the cost now is 20,000 or 10,000. They're going to give you 20,000 or 10,000, not the 70,000. So always put that in mind. Always know that you're not being paid the actual value of your stuff, just the current value of your stuff. The third type of coverage is extended replacement cost. This is mostly done for buildings. For example, let us say you built a building in 1970 and you have insured it, and then there's structural damage and the insurance company rebuilds your building. Obviously, the construction cost in 1970 and the construction cost now is not the same. It has risen. So in this case, they are going to pay you more than the limit of your insurance. They usually don't go above 25% of the coverage limit. So for example, let's say you had paid you had a coverage limit of 2 million. What the insurance company is going to pay you is 2 million plus 25% of 2 million, and they cannot exceed that point. So thank you for watching this video today. Kindly share with your friends. Don't forget to like, subscribe, and comment down below if you deal in insurance and you know more than I obviously know. I want people to comment and name an insurance company that is legit, that pays on time, that does not make clients suffer before they get their payments. I want the name of that insurance company. And until next time, it has been your girl Property Sue. Kindly subscribe and hit the bell button to get notifications so that you can get important and free information like this. Bye.